Are you a long bias day trader? Are you a short bias day trader? Is it possible to be both? So I'm asking the question, is it possible to be a short bias trader and a long bias trader? How does that work? Can you be a bear and a bull? And I think it's better to be both. When it comes down to it, it's all about opportunity. It's all about being able to identify opportunity. If you see a stock that's going higher and higher, and you can identify that, hey, the stock's got good news, it's got a lot of volume, the price action looks really good, there's a lot of support to it, it's going higher, I need to get in on this, but I'm a bear and I can't buy long, I want to wait for the stock to crash. That's a terrible way of looking at it. For me, if I see an opportunity, I want to be able to capitalize. I want to be able to know how to short. I want to know how to go long. I want to be able to take profit. I want to be able to jump in short and make all those different actions and moves without thinking differently. I don't want to have a bias to me. I don't want to feel like, hey, I only like to short stocks. Hey, I only like to go long. I don't want to be a bear. I want to go higher. And for me, I think it's really good to understand both arguments. If you're a day trader, it's good to understand where the shorts might short a stock. It's good to understand where the longs might go long, so you can play vice versa. I talked about this idea in a video before. It's kind of a chess game. It's a mental game. Looking at a chart, let's say if I buy a stock and I see the stock's going higher, I see it had previous resistance earlier, I'm probably thinking, okay, this looks pretty good. This gets back above that previous resistance. We're gonna get shorts covering. It's gonna go higher. It's gonna cause a short squeeze at that point, and I think a lot of the shorts are gonna cover. It's gonna cause more buying. More buyers are gonna come in. This is really gonna go. So in my head, I can think like a short. If I was a short, where would I cover at? Where would be my stop loss? And vice versa. Say if I'm a short and I'm looking for a stock to go down, and I would think about, okay, if I went long at that point, where would my stop loss be? I'd probably be at the stop loss there. So if we get below that area, I think a lot of people are gonna start selling. They're gonna get worried. They're gonna get fear there, and the stop loss are gonna get hit. People are gonna get out, and the stock's gonna crash. So I can constantly be thinking, I can be a bear, I can be a bull, but I can do it both. Why limit myself to either way? There's gonna be days where the market's just hot, the small cap world is hot, their stocks are going up 200, 300% like this past week, where it's just better to be a bull. It's just better to ride the wave. And then there's gonna be those days where you just wake up and everything's crashing. It's so easy just to short anything and everything and make profit. So you need to be able to do both. I see a lot of traders who don't understand how to short, so that's something you need to work on. If you don't know how to short, if you're not able to short, you should find a broker that's allowing you to short. I think short selling in general will really make you a better day trader. It'll help you understand kind of where the different mechanics are, kind of give you an idea of actually, like I said, that chess game idea where would the shorts cover at, where would the longs cut their loss at, and kind of understand both ideas. If you can look at a stock and say, hey, this isn't that good of a short, it's a good long, but possibly this could be a better short later, and kind of be thinking constantly. A lot of times I'll trade a stock, I'll go long at first, I'll make profit, it'll get to a point where it finds resistance, and I'm like, oh, it's time to short this. It gets really extended. I can go short and then make money on the downside. So if the stock goes up 100%, it's gonna come back down at some point. I'm gonna look for the opportunity always. It's all about finding those opportunities. It doesn't matter if it's long or short. It's all about being versatile and understanding the different ways to capitalize on these moves. All these stocks that go up really fast that we trade, they're gonna go down really fast as well. Sometimes they go up fast and they go down even faster. So there's always great opportunities to go long and short, and understanding which way to play it, and understanding, hey, it might not be a good short at this point because there's a lot of support there. I see if I was a long, I might be dip buying right here, and I don't want to short here because I think it might go higher. So it's good to understand both ideas, both bias, and kind of be on the fence. If there's an opportunity, I'm going to go short. If there's an opportunity, I'm going to go long. And for me, I think that's just the best way to be a day trader, and to really have no key bias and be ready for any opportunity out there.